How does the mortgage process work in New York City? We'll demystify this topic in the following video. I'm Nick at Houseit. Visit our website, houseit.com, to learn how to save money if you are looking to buy a home here in New York City. We also help sellers and renters save money in, of course, New York City, Long Island, the Hudson Valley, as well as Miami and South Florida. So please do reach out if that is of interest. And let's get started. So, how does the mortgage process work in New York City? Well, the very first interaction you may have with a mortgage banker or broker in New York City is at the time you are actually beginning your home search. Now, you need to know what you can afford, and a lender conversation with a banker is the easiest way to figure that out. So you'll typically reach out to some lender. Maybe you found one online, maybe you found one through a friend or a colleague at work, maybe a relationship banker at your banking institution may have connected you. But in either case, some professional will tell you essentially what you can afford as it relates to your home purchase. That's the first step. The second step is they'll actually provide you with hopefully a pre-approval letter. Pre-approval letter is something you will need in the course of submitting offers for properties here in New York City. You could also potentially get a pre-qualification letter. This is something that requires a lower level of due diligence and underwriting on the part of the lender. So it's easier to obtain, and many buyers choose to go the pre-qual route up until the time they become rather serious and are actually ready to submit an offer, in which case they get a pre-approval. For our part, we recommend that whichever bank you utilize for your pre-approval is a household name. The reason is that when you submit your offer, you are going to get judged, quite frankly, by the seller and the listing agent. If you have a pre-approval from Wells Fargo, that is a legit household name. Everybody has heard of Wells Fargo. So if your offer comes with a Wells pre-approval and the other buyer whose offer price is the same comes with a pre-approval from your local bank name, whatever, it's obvious that you're going to have a leg up. So even if ultimately you do want to go with, probably your very nice and fantastic local bank or some other non-household name, there's nothing wrong with that. Just strategically, it doesn't make sense to get a pre-approval from them because it may not give you the best result when it comes to negotiating. But the good news is that you actually don't have to technically shop for rates and make a firm decision on who to use for your financing most commonly until you're already in contract. So you can get a pre-approval letter from anybody. It doesn't matter. It doesn't bind you to using them for the actual loan part of the process. Now, once you're in contract, this is when you really have to get serious, have conversations with various lenders, find the one whose terms you like the most, and actually go ahead and submit the application and undergo that process. You'll typically pay an application fee. You'll then be asked to submit a bunch of information and documents, and the lender will also typically order an appraisal at this time. So this really kicks off the formal process in terms of getting a mortgage. So you'll submit everything to the underwriters. Usually you won't hear back for a couple of weeks. Oftentimes it can take up to 4 weeks to hear back from the underwriters. And along that journey, you may receive a request for some additional documentation. For example, if you're self-employed, there may be some unique requirement that they'll ask you for after you've already submitted the bulk of your documentation. So the process and the timeline does vary by the lending institution that you are working with. But with a bit of luck, after a few weeks, you will receive a commitment letter from the lending institution. And the commitment letter basically is their promise that they're going to give you the loan. So in other words, they've done their due diligence on you, their underwriting process is complete, and in principle, they're ready to move forward and basically give you the mortgage. Now, in most cases, the commitment letter will be a conditional commitment letter. In fact, it's very, very rare to find what's called an unconditional commitment letter. It's not too much of a problem, though, because your typical commitment letter's conditions are going to be very easy to satisfy. For example, they might say, hey, Nick, you need to submit your most recent bank statement for your Chase account. Or, oh, you forgot to sign this one page of your tax return. Please go ahead and sign that. So you will need to then sort of start to fulfill these conditions prior to the lender giving you the clear to close. In general, though, if you work with a banker, just make sure that you are doing everything you can to minimize the number of conditions that will appear on that letter. Because if you get a conditional commitment letter, and it has ridiculous conditions that you cannot satisfy, and you have a mortgage contingent transaction, you've technically satisfied the contingency and you've therefore lost the protection and the ability to back out of the deal the moment you receive that commitment letter. So do whatever you can to work off any requirements before they print out that commitment letter. Just to backtrack a bit as well, many people wonder, how does it work with my interest rate? Like, when is that locked in? And the answer to that question is customarily you lock your rate at the time of the contract being signed when you submit your actual mortgage application to the lender. That being said, different banks, different lenders have different programs and approaches for locking rates. In some cases, you can potentially lock a rate before you have a signed contract. It just depends on the particular banker or broker, lending institution that you are working with. One final thing we'd like to share with you is to remember the fact that certain lenders provide additional discounts based on the number of assets and the amount of monies you basically have with their firm. So in the case of your major banks like Chase, Bank of America, for example, there may be additional ways of lowering whatever rate they've quoted you if you agree to move over a certain amount of assets to their platform. So definitely want to think about that as well, because in some cases, the discounts could be substantial. In some cases, potentially they could lower your interest rate by 1/8 or by 1/4 point, which on a typical New York City loan size for a 30-year term, the value of that is in the tens of thousands of dollars in terms of interest that you can save. So please have as many conversations as you can stomach with various lenders and loan providers, and get yourself in a situation where ideally pre-offer, pre-signed contract, you generally have a list of like maybe 3, 4, or 5 banks whose rates are really good, whose lender representative, i.e. the banker or the broker you really connect with on an interpersonal level, who is experienced and competent. And then when the contract is signed, go back to that short list of lenders, firm up their pricing, and finally decide who you actually want to work with. The other tip or pointer is to consider the idea that if you really, really want a property and you think for whatever reason your financials are borderline in terms of loan approval, consider applying with 2 banks at the same time. Now, most people will get really wide-eyed when we say this, because they're immediately thinking, like, are you telling me that I have to spend another $800 on a loan application? The answer is, if you want to totally mitigate the risk of a denial and potentially losing out on the property, there's no harm in applying with 2 lenders. You're never typically bound to use a lender, even if you apply with them, and even if you get that commitment letter, you can still walk, not show up at the closing in most cases. So you can apply with 2, and even if you get 2 commitment letters, you can just choose which bank and institution you actually want to fund with at the closing table. So we hope this wasn't too much information, and if you have any other questions or suggestions for topics, please leave a comment below this video. You can also send us an email to team@houseit.com and visit our website, houseit.com, to learn about ways to save money if you're buying, selling, or renting here in New York City. I'm Nick at Houseit, and we'll see you on the next video.